Hello, friends. If you have looked at your bank account recently, you already know the cost of everything is still climbing. But right now is an extra payment sitting in the British system that thousands of people are completely missing out on. Is money that has been legally set aside for you. The problem is the government is not going to send you a text message to remind you to claim, and there is a strict deadline attached to this. If you do not take action before July 15, that money goes back into the Treasury, is gone for good. So today, I am going to walk you through exactly what this payment is, who is eligible, and the precise steps you need to take today to make sure this money lands in your account. We are going to cover 5 specific financial updates today, including a massive backdated payout worth up to £3,500. I need you to stay until the very end of this video because the 4th item we discuss is a criteria change that the DWP has kept incredibly quiet, affects almost every pensioner household in the UK. Before we get into it, please take a second to hit the subscribe button and turn on the notification bell. I know every creator on YouTube asks you to do that, so let me explain why it genuinely matters for this channel. The British benefit and pension systems are constantly shifting, rules change, thresholds move and deadlines are adjusted. When these updates happen, the DWP does not call you up to explain how you can benefit, change the policy, update a page on a website, and expect you to figure it out on your own. The people who are subscribed to this channel find out about these changes before they become a critical problem. The people who are not subscribed tend to find out afterwards. They find out after the deadline has already passed, after the letter arrives, or after the deductions have already started appearing on their statements. That is the difference between getting what you are legally owed and missing out entirely. Hit subscribe, turn on those notifications. Let us get straight into the details. The first and most urgent topic is the pension credit backdating window for the upcoming winter support. There is a widespread misconception that if you did not claim pension credit by the start of the year, you have missed the boat for the extra seasonal cost of living top-ups. That is completely wrong. The law allows pension credit claims to be backdated by up to 3 months. Because of how the qualifying periods are structured this year, July 15 is the absolute final date to get your application in if you want to trigger those historical extra payments. If you qualify, is not just a few pounds, it opens the door to an average of £3,900 a year in ongoing support, plus immediate access to the winter fuel payment. Problem is, the application process looks intimidating, so people look at the forms and put them in a drawer. Every week you hesitate is money that is permanently recovered by the state. Do not let the paperwork stop you. Check your eligibility or start an application over the phone. Ring the Pension Credit Helpline directly on 800 99 1234. If you prefer to do it online, go straight to gov.uk and search the term Apply for Pension Credit. Our second point concerns a major shift in attendance allowance processing times and backdating. Attendance allowance is worth either £71.70 or £108. 55 per week, depending on the level of care you need during the day or night. What most people do not know is that you do not need to have a full-time carer living with you to qualify. It is entirely based on the help you need, not the help you are currently receiving. The DWP is facing a massive backlog of claims right now, which means processing is taking months. However, your claim is successful, your payments are backdated to the exact date the DWP received your initial application form. You delay requesting the form because you are waiting for a doctor's appointment or a medical report, you are actively losing over £400 every single month. Get the clock ticking immediately. Call the Attendance Allowance Helpline on 080 731 0122 to request a physical application pack. Date they stamp on that pack when they send it out is your official claim date. Third update involves housing benefit top-ups for people who are already reaching state pension age. A massive trap exists for mixed-age couples. where one partner has reached state pension age but the other has not. Under the current regulations, you can no longer make a new claim for legacy housing benefit as a mixed-age couple. You are forced onto universal credit instead. But here is the insider knowledge that can save you thousands. If you are a single pensioner, or if both of you are over state pension age and you already receive pension credit, you can still get your rent paid entirely through housing benefit without ever touching universal credit. Many people move home or face a rent increase and assume they have to apply for universal credit, which often leaves them financially worse off. Is not universal credit you need if you are both of pension age. It is local authority housing benefit. Before you make any changes to your housing claims, contact your local council directly. Go to Gov.uk and search Find Your Local Council to get their direct benefits department number. Now for our fourth point, and this is the one that is slipping under the radar for thousands of households. DWP has quietly altered the asset and savings limits regarding how investment bonds and life insurance policies are treated during means testing. Previously, if you had a small investment bond, the DWP would often count the surrender value of that bond as capital, instantly wiping out your eligibility for council tax support and pension credit. Following a recent clarification in the adjudication guidelines, certain types of non-income producing insurance bonds must be fully disregarded as capital. It means thousands of people who were rejected for benefits in the past because they had a small nest egg are now fully eligible. If you were turned down 2 or 3 years ago because your savings were a few £100 over the £16,000 threshold, you need to look at this immediately. The DWP is not going to review old rejected claims automatically. You have to trigger a new assessment yourself. Go to gov.uk, search Council Tax Reduction, and input your details using their updated calculator to see if your local authority now owes you a discount. The fifth and final point today is the carer's gross allowance earnings threshold trap. If you look after a partner, a relative, or a friend for at least 35 hours a week, you are likely entitled to £81.55 a week. But the DWP has an incredibly strict earnings ceiling of £151 a week after tax and expenses. You go over that limit by even one single penny. If you earn £151, you lose 100% of your carer's allowance for that week. DWP uses an automated system linked directly to HMRC payroll data to spot these overpayments. Tragedy is that they often let the overpayments build up for months or even years before sending a massive repayment demand. To protect yourself, you must use allowable deductions to keep your net earnings below that limit. You can deduct half of your earnings to pay into a private pension or deduct the cost of care for a child while you are at work. If your earnings fluctuate, you must report it immediately to avoid a debt collector's letter. Call the Carer's Allowance Unit on 0800 731 02297 to update your earnings logs before the July payroll cycles begin. To summarize what we have covered today, these 5 areas require your immediate attention. First, pension credit deadline on July 15 is your final chance to secure backdated seasonal payments. Second, attendance allowance backdating is determined by the day you request the form, so call 800 731 122 to log your date now. Third, if you are a pension age couple, ensure you claim local council housing benefit rather than being pushed onto universal credit. Fourth, check if your rejected benefit claims are now valid under the new capital disregard rules for investment bonds. And fifth, monitor your carer's allowance earnings down to the penny to avoid the automated DWP overpayment trap. None of these payouts come looking for you. DWP is not going to ring your phone to offer you more money. The local council is not going to write you a letter suggesting you pay less tax. The only thing standing between you and this money is knowing that these rules exist and taking that one specific step to claim what is yours. This video has been useful to you. Please subscribe to the channel and share it with someone you know who could use this information. Send it to a parent, a neighbor, or a friend who is managing their pension or care needs. One quick conversation or a forwarded link could make a massive financial difference to their household this month.
Thank you for watching.
Keep your records organized, and I will see you in the next one.